And that's when the volatility started. And the volatility all started in our time zone. And that's, interesting in and of itself. The big rallies mostly occur during Asian trading hours. The big sell-offs happen in U.S. hours, or, late European, early morning U.S. is when you see all the selling. Well, we had another positive week in precious metals, but it wasn't without a lot of volatility, especially over the past two trading sessions that saw wild swings in the price of both gold and silver. But despite those wild swings and today's big drop, gold still managed to gain 2.2% on the week, and silver rose 4.7% on the week. Most significantly, gold is above $4,000. It closed at about $4,000 or $4,080, and silver ended the week back above 50. But intra-week on Thursday night, it got above 54. In fact, silver almost made a new record high. It was about 25 cents away. And that's when the volatility started. And the volatility all started in our time zone. And that's, interesting in and of itself. The big rallies mostly occur during Asian trading hours. The big sell-offs happen in U.S. hours, or, late European, early morning U.S. is when you see all the selling. A lot of it is before the U.S. stock market opens. Usually within an hour or two before the opening bell, they hit the metals hard. And that's what happened on Thursday and Friday. But it shows you that a lot of the buying is coming from Asia, right? They're buying gold. The selling and the speculating against gold is happening in our time zone. But on Thursday, we had gold up over $50 in the evening. And then in the morning, it was down $50. Silver, which was up over $1 in the evening, was down over $1 in early morning New York trading. Then last night, silver again soared over $1. Gold was up over $50. And then near the open of our market, or just before, there was a huge sell-off, and gold dropped like $130, $140. Silver dropped over $1.50, not from the high, but went from up over $1 to down more than $1.50. So more than a $2.50 swing in the price of silver between the time U.S. markets closed and U.S. markets opened. But I think what's the most significant about all of this volatility is that it's taking place above 4,000 for gold and above 50 for silver. That's what I've been saying. 50 is the support for silver. Now, it can trade below it, but that's really where the support is. That doesn't mean it can't trade 49 or even 48, because silver is inherently pretty volatile, and so it's hard to stop at a round number. But this is about the support. Gold, 4,000 is key support, and we've managed to go below it, but not by much. Gold never went below 3,900 after it went above 4,000. The lowest I saw was maybe 3,910 or 3,920. Silver did go below 50, but then it came soaring back. I mean, when silver almost hit a new high on Thursday night, gold was still maybe $200 away from a high. Gold got, less than 200, but because gold got back above 4,300, I think. But after today's sell-off, it's back below 4,100. But this is very constructive trading as far as I'm concerned. 4,000 is the new 3,000, just like 3,000 was the new 2,000. And silver, when silver was at 40, I said 40 was the new 30. And now it's almost like 50 is the new 40. Yes, silver did go below 40 a few times before it rocketed up to 50. And that's why it may go back below 50, especially when we're only 60 cents away. But I wouldn't wait. I think that today's sell-off was another buying opportunity for Schiff Gold customers to go to the Schiff Gold website. on Friday, on Saturday, and even Sunday morning, because I expect another big run-up in gold and silver prices Sunday evening into Monday. Now, maybe it won't be sold off in the U.S. time zone. What I've managed to notice is that the big sell-offs happen later in the week, not earlier. So there's a good chance that we get a big run-up on Sunday night and then an even bigger run-up on Monday morning as Americans who got out of their silver and gold rush to get back in. So it's another great weekend buying opportunity at Schiff Gold to load up on gold and silver in particular, which I think has got an explosive move that's coming. But a lot of other things happened that are bullish this week, fundamentally, for both gold and silver. So one of the things is the carnage in crypto. It's pretty clear that there is a major rotation going on, and it's not just from growth or risk type stocks to value dividend paying stocks. That's happening too, but it's a general risk off trade. Not that all equities are risk off, but portfolio managers seem to want to have less risk. So the most riskiest assets are getting sold and people are moving into other assets that have less risk. They don't want to move into bonds, right? Because the old safe havens are no longer safe anymore when you have inflation as the primary risk and a dollar debasement. That's why Treasury prices were also down today and down on the week, and yields are rising. But we saw moves down in tech stocks. Tech got hit pretty hard. In fact, the NASDAQ was down about 4.5% on the week. In contrast, look at gold and silver stocks. The GDX was up 5% on the week, almost as much up as the NASDAQ was down. And the GDXJ almost up 5% as well. Now, of course, these gold and silver mining stocks would have been up a lot more without the losses from today and yesterday, right? And so it could have been a much bigger move. And I think it will be a much bigger move next week as the rotation out of risk continues, because yes, there's risk in gold mining stocks, but not nearly as much as there is in these tech stocks. And there's a lot more earnings behind them. There's a real strong fundamental story for the gold stocks. In fact, Barrick Gold came out with its earnings Monday, and over the first 3 days of the week, Barrick Gold was up 13 or 14% before pulling back with this, these violent, sell-offs in gold. But that highlights the powerful potential of the gold mining sector to earn money in this gold bull market. And so this is bullish for gold because it's going to bring more money into this sector, but also it's what's happening in crypto, because crypto got beat up the most, more than just AI-related stocks. It was anything even tangentially related to crypto. Bitcoin itself was down about 9.25% on the week, cracking decisively below the psychologically important 100,000. We are trading now at just above 95,000. The low that I saw intraday so far was exactly 94. I'm looking at Bitstamp. There's various exchanges, so it could be different. But I saw 94 was the low in the exchange I'm looking at right now. And now we're just above 95, but we're way below 100,000. And remember, we first hit or broke above 100,000 in Bitcoin in December last year. So about 11 months ago. Remember all the Bitcoin 100,000 parties, right? They were popping the champagne corks. How many people who were partying at the Bitcoin 100,000 party 11 months ago believed that Bitcoin would be back below 100,000 11 months into the future? If you remember what they were saying back then, we were going to be at 200,000, 250,000, who knows, right? There were all kinds of pie in the sky forecasts for the end of the year 2025. Nobody had Bitcoin going down. Nobody was talking about Bitcoin being below 100,000. Everybody was like, oh no, this is the breakout. This is it. Now that we got through 100,000, the sky's the limit. Get ready for the moonshot. And, it wasn't just the tokens. And of course, other tokens, the altcoins, the granddaddy of the altcoins being Ethereum, I forget the percentage decline, but it was greater than Bitcoin. Bitcoin actually held up the best in crypto land, down under 10%. All the other tokens were down more. MicroStrategy, though, the poster boy for Bitcoin treasury companies, was down 17.5% on the week. This stock, MicroStrategy, is now down 64% from where it was at its peak in November, right? So after Trump won the election, promising to make America the Bitcoin or the Bitcoin capital of the world, the leader in crypto, right? That's what excited everybody, and that drove MicroStrategy up to its high. It's now down 64%. And, Donald Trump didn't have to make America the Bitcoin capital of the world or the leader in crypto. Unfortunately, that already happened. We are the Bitcoin capital of the world. We are the leader of crypto. And that is a bad thing. When the crypto bubble is deflating and all the air is coming out and all the companies are collapsing, it's the leader in crypto, it's the Bitcoin capital that suffers the most. So there is the most damage. In fact, the damage was done to our economy when we were making all these malinvestments and wasting all this money on crypto. Now that everything is collapsing, all that does is reveal the mistakes that we made to the world. And now we have to deal with the consequences of those mistakes. The Bitcoin that MicroStrategy bought, right? Michael Saylor, on behalf of MicroStrategy, he spent over $47.5 billion. And God knows what he spent over the last week, because this is the number as of the prior week. He's going to announce on Monday how much money he blew this week, right? But over $47.5 billion to buy more than 640,000 Bitcoin. His average price is just over $74,000. Now the price is a little over $94,000, $94,700 as I speak, right? It's selling off a bit. That is a 27% gain over 5 years of buying. So MicroStrategy, right? Michael Saylor is going all around the world telling everybody that Bitcoin is the greatest asset that there is, that U.S. government should just sell all of our gold and we should just put it all in Bitcoin, that everybody should just buy Bitcoin instead of real estate, instead of precious metals, instead of stocks, because the returns are going to be so phenomenal, it's going to dwarf everything else, that there's no point in being diversified. In fact, you shouldn't just put everything you have into Bitcoin, according to Michael Saylor. You should put everything other people have. You should borrow money so you could put more money into Bitcoin than you actually have assets, right? Go into debt, according to Michael Saylor. Bet the farm, mortgage the house, right? Take out a loan against your business and buy Bitcoin because it's so great. He is up 27% over 5 years of buying. That's it. I mean, if Michael Saylor had simply, every time he went to buy Bitcoin, if he had bought gold instead, had he bought silver instead, had he bought the S&P 500 probably, he'd have more money today than he has because of all the money he's squandered on Bitcoin. But the other big difference is he can't sell. That 27% profit means nothing. It's on paper. He can never realize it. Had Michael Saylor bought $47.5 billion worth of gold over the last 5 years, and he'd be up way more than 27%, he could sell it all. He could actually realize those profits if he wanted to. It is impossible for MicroStrategy to ever realize any profits in Bitcoin. All it's going to do is eventually go bankrupt, and the Bitcoin is going to get sold off. But the significance of all this is money is coming out of crypto. That's obvious, right? All these stocks are getting obliterated, one after the other. Stocks down 70, 80% or more that are Bitcoin treasury companies, Bitcoin exchanges. The whole thing is imploding. But not only is this good for gold in that it's going to, put gold back in front, right? It was on the back burner. Everybody was focusing on Bitcoin because, Bitcoin is better than gold. Bitcoin is gold 2.0, right? It's doing so much better. Well, clearly gold is doing much better than Bitcoin. And so the conversation is changing in favor of gold. It's get rid of your fool's gold, buy real gold. So that's bullish for gold because money that was being diverted into crypto can now go back into gold because investors want less risk. Bitcoin is more risk. Bitcoin is about the riskiest thing you can own. So if you're trying to de-risk your portfolio, right, you don't want Bitcoin, you want gold. But also, as the Bitcoin bubble collapses, that hurts on paper U.S. economy. The GDP is going to be impacted. Unemployment is going to rise. A lot of people that work in the crypto industry, not only are they going to lose their life savings if they have it in crypto, but they're going to lose their jobs. They're going to lose their income. So this is going to mean, more Fed money printing, and that also is going to end up being bullish for the price of gold. But a lot of other stuff happened that's bullish for gold this week, apart from just Bitcoin falling apart. And first, before I get to that, one of the factors that is hurting the risk stocks is the fact that a rate cut in December is no longer a sure thing. It's basically a coin toss at this point, based on a lot of comments made by FOMC members that they're not really sure, what they're going to do with rates. And so that was hurting risk assets. But it's interesting, money flew into gold and silver, even though they're talking about not cutting rates. People think, that should harm gold and silver because, gold and silver want interest rate cuts. But because they may not cut rates, investors want safe havens, and that's gold and silver. And by the way, it doesn't matter to gold and silver if the Fed cuts rates or not. What matters is they're not raising rates, and they should. Interest rates are too low. They were too low before they were cut. They never should have been cut. And because they were cut, and because everybody knows the Fed's not going to hike, no matter how high inflation rises, well, that's bullish for gold. But other things that happened during the week that were bullish for gold, several of them, and I don't want to repeat myself because I went over some of these on the podcast I did on Wednesday. I did a podcast Wednesday evening, a live podcast, the Peter Schiff Show podcast. It's up on my YouTube channel. It's up on, Apple, iTunes, Schiff Radio. So when you're finished watching this gold market wrap, and after you go to the Schiff Gold website and buy some gold and silver,